Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. I hope the week's gone well and I hope this fellow stops making the racket outside my window. Fitch warns Africa risks falling back into financial distress. Sub-Saharan African states have borrowed so much money since the debt forgiveness programs earlier this century that they risk falling back into financial distress, Fitch warned today. Between 2001 and 2015, 36 states, all but 6 in Africa, had $36 billion of debt wiped off as part of the heavily indebted poor countries and multilateral debt relief initiatives. The median public debt to GDP ratio of the 19 sub-Saharan African countries rated by Fitch plummeted to just 26.7% in 2012. Wow, that was the low, right? As a result of the wave of debt forgiveness. However, it has since rebounded to 54.3, and actually we're pretty close to that as Kenya. Of course, it's 128% in Cape Verde, 100% in the Republic of Congo, and 94% in Mozambique. There is now limited scope to accumulate non-concessional public debt at such a rapid pace without an increasing risk of debt distress, Fitch. Gregory Smith, whom I interviewed, I'm traveling to the Paris Club. Then he says, nobody expects this debt to be repaid. They expect African sovereigns to take up more debt and kick the can down the road. But that depends on the markets being open then. That's very true. In terms of debt to government revenues, a measure many view as more relevant, the rebound has been equally stark from a low of 130% to 277% as shown in the first chart. Chinese loans to Africa, Beijing has lent $143 billion between 2000 and 2017. A further source of credit has been the Eurobond market, where issuance by the Fitch-rated sovereigns, excluding South Africa, has jumped from an average of $1.1 billion a year between 2006 and 2012 to $6.9 billion from 2013 to 2018. That's interesting. 6.9 billion in 2013 and has already hit 5.7 billion so far this year, and it's expensive. Ethiopia approves the law to open its telecoms to foreign investors. I mean, I remember when I wrote in July 2018 and I was quoting him and he says, we've got to do an economic pivot. He said words to that effect. He's executing. This is a big deal. It offers a rare opportunity for foreign investors to access one of the continent's biggest markets, 100 million people. MTN, Vodacom, many others. Sudan's Air Force chief, what a recalcitrant fellow, insists the army is prepared to hand over power. We do not want to rule Sudan forever, a few months and we will go home, he said. Initially welcomed as liberators, talks between the Transitional Military Council and protest movement leaders broke down over the structure of an interim government before security forces turned their guns on the people last week. Listen to this. I feel these negotiations will not go well. They behave like kids. They're not behaving like adult politicians, he said, of the protest leaders who he believes are unwilling to compromise. The truth is probably the reverse, isn't it? The opposition has also demanded an international investigation into last week's killings before talks can restart. Well, that's not going to happen. I can tell you that for free. And I wrote about this. I said, we now have two visions of the future in Sudan. One vision played out on our screens. The protesters could have been our wives, our children, our daughters, and our sons. The other vision is that of MBS, MBZ, and Al-Sisi, and it's red in tooth and claw. Vladimir and Xi backed the Gulf view, and America, so far, is way below the radar somewhere. And that took me back to Hugh Masekela. I want to be there when the people start to turn it around. I said Sudan is a Masekela pivot moment. And I described, the mood of this revolution, the zeitgeist was so intoxicating. It was like some oud the Saudi Arabian ambassador once gave me, which stayed with me all through the day. And I'd find myself sort of intoxicated and delirious, smelling myself. It was quite peculiar. But it was that good. The exquisite murals, the composition of the crowds, the element of girl power which spoke to hope and a future. As I watched events unfold, it felt like Sudan was a portal into a whole new another normal. David Pilling in the Financial Times captured the essence of it by quoting William Wordsworth, writing about the French Revolution. Oh, pleasant exercise of hope and joy, for mighty were the auxiliaries which then stood upon our side. We who were strong in love, bliss was it in that dawn to be alive, but to be young was very heaven. What a beautiful statement. Sudanese soldiers are seen driving an army vehicle in the capital Khartoum in this photograph, and they're basically going back to Paul Virilio's comment, right, about the street. IMF has approved the disbursement of $248.15 million under Angola's credit facility. This is the rapprochement between the IMF and Angola. The alternative market breached $9 for the first time against a relatively sticky interbank rate. Forget the interbank rate, it's irrelevant, of $5.88. It's the black market rate that counts. 25th of February, I wrote about this, and Tendai Biti had predicted a 6 to 8 range. Government was talking about it appreciating 2.5, which I said is Hail Mary economics or voodoo economics. And now we've overshot Tendai's admittedly bearish prediction at that time. So, I've made this point before, there's a correlation between high inflation and revolutionary conditions. The petrol price hike was the proximate cause of the last flare-up. And I was quoting a gentleman who said the government can switch off the internet, but not the frustrations of millions of people. The Rand, which I said had been ace Magashuled, because he started that debate about quantitative easing or quality easing, he called it. So we popped through 15. I think that was last Friday. We've come back to like 1480, even as low as 1466. But I still think that we're going the other way. One, because of this domestic fracas that we've got there, and I think that will continue to exist and play out. And then the second point is the China emerging market negative feedback loop contagion. South Africa, if you look at it in terms of its economic interconnection with China, is probably one of the highest in Africa. South African all-share, however, has surged. It's up 11.3% year to date. That's all about gold, I think. Egyptian pounds, 16.75. Nigerian stock market has underperformed so much for so long that a rare valuation phenomenon just occurred recently. Its dividend yield, which is 5.3%, is now higher than its PE ratio, which is 5.1%. This is quite rare to see. Price to book is at 0.8. Nigerian all-share minus 4.46% this year. Ghana Stock Exchange Composite Index minus 3.41% this year. East African community budgets were all presented yesterday in respective parliaments by their respective finance ministers. Kenya, $29.2 billion. Tanzania, $14.3 billion. Uganda, $9.1 billion. Rwanda, $3.2 billion. Burundi, $824 million, but of course he's got the rare earths. And South Sudan did not present its budget. Headlining Business Daily this morning, alcohol, betting, loans to cost more in budget. Then Deloitte have put out a budget report unraveling the puzzle, capital gains tax going up from 5 to 12.5%, reduction of the withholding tax VAT rate from 6 to 2%, number of other excise duties, but I felt he was trying to, the message he was trying to send was steady as she goes. We know we've overshot a little, but we're bringing it all back under control. But, I've done this program, Metropole. I must have done about 50 programs. I've yet to have anybody positive on it. I've got to find somebody positive. The Nairobi all shares up 7.13% year to date, trading at a P ratio of 11.84. Nairobi all share up 7.13%. NSC 20 down 3.98%. Thank you for stopping by. Wishing you a tremendous weekend.